Hello guys, my name is Emmanuel Samuel Labo and people call me the Peeps Prophet. Okay, so it's Monday, the 12th day of May, and let's just look at what the market is doing. Uh, let's see what the market is going to, it's likely going to do this week. And remember, it's CPI week. Okay, so you want to keep your analysis simple, you want to keep it straightforward, okay, to avoid confusion, so that you can align with what the institutions are doing. So as you all know, I like to do my analysis from the DXY, and the DXY is the dollar index. Okay, that is what the institutions use. Okay, that's the interest rate used to regulate US dollar currency pairs. Okay, so and of course you know that whatever the dollar index is doing will be doing the inverse on other US dollar correlated pairs such as Euro USD, GBP USD, and any other pair that carries USD, okay, as the quote currency, not really the base or even the base currency. Okay, if you are doing base paired with a quote currency, then when the dollar is weak, if your US dollar is your base currency, if the dollar is weak, what are you going to do? You should be selling. And if the dollar is strong, you will be buying. That is, if the dollar is the base currency. And opposite, all right, you do the opposite when US dollar is the quote currency. When it's weak, you buy. When it's strong, you sell. Okay, so that's how it works. So basically, we are going to look at the dollar index. Now, this is the dollar index. Something shocking happened. Okay, don't worry about this. This was my anticipation entry during last week trades analysis, so don't bother, okay, about this. This was supposed to be my entry that week, but then the market didn't actually capture that entry at the time I thought it should. So I want you to pay attention to what the market did yesterday. Was Sunday and today is Monday. Look at the market open for the week right here. Okay, formed a gap right here. I'm a 1 hour time frame on the dollar index. So the market gapped up, formed a vacuum right here. Okay, and most time we know one of the features of the Monday trading um, market profile, most times it forms a consolidated pattern, kind of not showing willingness to buy or to sell. It moves sideways, but then we could see that today the market moved massively. Okay, you could see the massive move right to the upside. Okay, I actually saw that coming. Let me show you guys on the higher time frame. I remember we like to do our analysis from the higher to the lower time frame, because those are the high time frames. Those are the time frames that the institutions will want to look at or focus on. Okay, so now this was what actually prompted the market to move massively this morning. Okay, I know a lot of people want to chase price, but no, we don't do that here. Okay, so I'll show you guys quickly now why market moved. So when you go to your Fibonacci retracement, we want to know which level, where are we coming from, where we are actually coming from, where we are and where we're going. Okay, so first thing first, let's look at the general market condition. What is the general market condition? When you zoom out a little bit, you see that it's a bullish market condition here on the dollar index. Okay, it's a bullish market condition because the market is what moving. It's an uptrend, a bona fide uptrend. Okay, so what really happened here? The market retested, tested this trend line. okay, and pushed up. You see how it reacted of that region. See the strong rejection at that point. Okay, it bought. Okay, so now how to know where the market is going to reach out for from this point is you simply need to put your Fibonacci retracement tool from the most recent low to the most recent high. For us right now, this is the most recent low, this is the most recent high. Okay, so what do you guys see right now? What do you guys see from this range? This is our dealing range from this low to this high right now, and you could see how market reacted, right? We are looking at the market going to 50% or to premium level. So from this point to the high right here, we have a 50%. This was the 50% I marked earlier today. Yeah, and then this is our 62, yeah, 32, 38%, 38, yeah, region right here, 38 level right here. Okay, now these points are very sensitive. You could see that I marked that here. I marked the 50% right here. Okay, so as soon as the market gets to this point, we'll see a reaction, of which right now you could see some form of rejection right there, because right now the market has gone into a premium point. I remember I told you guys, when prices are premium prices, you want to what? Sell. And when prices are discount, you want to what? Buy. It's like the normal market, okay? When you're giving discount, what will you do? You want to buy, right? Okay, but when the price is expensive, you want to what? Sell, not buy. Okay, so that's how it is in the market right here. Okay, so now you could see that price rallied into that region. Okay, why? Because throughout last week we've been seeing market selling. Okay, this was a massive sell that formed a liquidity void right here. It was a side movement. Okay, it was just a one-sided movement, so the market had to what? Rebalance this movement, because it was a massive sell side inefficiency, buy side imbalance. Okay, that the market had to rebalance into this level right here, this premium level. Okay, so today is Monday, and as you all know, I don't take trades on Monday. I always sit back and watch the market do its thing. Okay, so after the movement on Monday, I want to see the market give me a reason to enter my trade. Or when I see my signature on Tuesdays, I take my entry. When I don't see them, I wait and take it on Wednesday. Okay, and then remember, what we do here is one trade throughout the week. You just cap one trade and you're good. Okay, all right, so remember again that this is CPI week, so let's look at the lower time frame. If we could really see any reason why price actually initiated the buy. So let's look at the 1 hour time frame. So for some people, this might be an entry for them, because what do we see here? We saw price break the recent high. Okay, retested back into what? Into a fair value gap here. Okay, which is directly below this liquidity pool right here. So it's a high objective for one to buy right here. But for me, I wouldn't want to buy here because it's not in section. That was on Friday during the late New York session. Okay, I wouldn't want to buy here, except if you are holding the trade for the whole week. Okay, but for me, the time frame does not agree with the entry as far as I'm concerned. So look at what the market did. Went up right here. So if you look closely, you see a breaker, a bullish breaker right here. The market formed something like a W pattern. Look closely, see something like a W right here. Look closely, look very closely. You could see that bullish breaker. Okay, then the market broke this high here, This was the break of structure which gapped in, which formed a vacuum right here, retested into the vacuum. So this could be a very significant entry for those people trading vacuum space. So the fair value gap, we could treat this vacuum as a fair value gap, okay, from the high to the low, and you take your entry at this point, just a little bit above 50%, just a little bit, so that it will cap you in, okay, and you put your stop somewhere below this bullish order block right here, okay. And of course, depending on your trading pattern, but the most realistic is 1:2. So if you're targeting 1:2, you want to do reduce your lot size to have not lot size, your stop loss size, so you could have 1:2 reward is to risk to reward ratio, right? So you could see that the market extended, pushed up massively, but for me, I'm not seeing a trade. And as far as I'm concerned, even if I see an entry, as far as it's not on the days I trade, I don't take that trade. Okay, so that's what trading is all about. Discipline, right? It's not about the wins. It's not about how much you make, but it's about how much you can replicate it, one, and then how much you can sustain what you have made. Okay, yeah, so that's what it's all about. Okay, so for some, I know some people will chase price right now. When you see price going bullishly, they want to let's buy, let's buy, let's buy, and that was exactly what happened. Yeah, you could see that a good number of people are buying. Okay, but I don't want to chase everything I see. I leave price to do its thing. Okay, and just watch. All right, so that is basically the reason why I'm trying to give you a rationale as to why this bullish move actually happened today. Okay, so that's on the dollar index, right? And remember, the euro USD actually delivered the inverse. Wow, that was it. You could see that the market moved about 126 pips away from this entry point, right? Wow, that's crazy. Okay, if you're not disciplined enough, I know you want to chase price. All right, so guys, that was it on a lighter note. And now you could see that on euro USD it was the inverse. And let's look at our key point of interest from the higher time frame. So let's look at our point of interest from the higher time frame. So we have this is the 1 week now, and look at the trend line. We have price actually broke the trend line right here, so we have a retest back into that trend line. So we could see a very strong rejection on the trend line. Okay, you could see a very strong rejection on the trend line. And one of the most important things you should pay attention to is that we have confluences of not just the trend line right here. We have something here, exactly what we did on the dollar index. That is exactly what we are going to mark out right here. So let's do a Fibonacci retracement from the low here to the high, from the low to the high. Okay, beautiful. So now we have our dealing range, okay, from this low to this high. So we are going to mark out 50%, and that was why I marked this. This is 50% of the dealing range, right? And we also have that's equilibrium, okay, and then we also have what our OTE, okay, ultimate trade entry level, which is right here on my charts. On my Fibonacci, I have it as 0.38. Okay, yeah, you could flip it depending on what works best for you. Okay, so that's what I have right here. So look at how the market retested, guys. Crazy. Retested into that region, okay, into that region between the 50% and the 38, 038. Okay, 38% right here, and you could see a very strong rejection because there are two confluences we have right here. We have the trend line break and retest into that trend line. Secondly, we have what we have price slided into reacting off the discount region. Then thirdly, we have a breaker, a bullish breaker right here. If you mark this out, so we have about three confluences as to why price should react off that zone. Okay, so let's see what's going to happen by the end of the New York session today, because right now we are already we've gone past the London session. We are looking for to see what the market is going to do during the New York session. Okay, so that we know how we are going to position ourselves to cap in our trade, whether tomorrow or Wednesday, and go in line with the institution so that we can cap the biggest move for the week. All right, so that is basically why the sudden massive movement happened in the morning. Okay, so a very quick one is, if you ask me, I would say we are likely going to see a reaction of the zone, okay, pushing up to the upside. Okay, buying again, so now we have a new low. So let's look at it from the 1 hour time frame so that we can see more detail. All right, beautiful. So we have I want to believe this is a new low, but let's confirm that on the lower time frame. Let's go to 15 minutes. Yeah, beautiful. So now we have a new low right here. Excuse me. Yeah, of course we have a new low here, which has been what violated, so this is automatically our lowest low so far. All right, so what we want to do is, we now have a new dealing range. We now have a new dealing range, okay, different from the previous one we had. Okay, so we want to also use the Fibonacci retracement tool and see where price is likely going to reach out for from this low to this high. This is our new dealing range, right? So basically, this is 50% right here of the region. And what do we have there? We have a mitigation block right here. Okay, so likely price is going to buy up, okay, into that region, or want to reach out to close up this massive sell side inefficiency. All right, and then cover it up. Okay, we can even treat it as a bearish mitigation block, bearish mitigation pattern rather. Okay, when we draw our pattern right like this, so you could see something like an M pattern. Okay, and then this could be our break of structure right here. Okay, so we could treat this as our mitigation block, right? So we expected to see price retest back into the zone before we begin to what, go short on Euro USD if the price action gives us our signature by tomorrow. Okay, so that is what I hope to see on the Euro USD, and also that is my anticipation for the dollar index. Okay, I hope to see the dollar index also push. Okay, I hope to see it push down into that 50% of the region, and then that will tell us where to cap our entry and slide through the week. All right, so I hope this was helpful. Okay, so I'll keep you updated much later after the New York session. All right, I'll keep you updated, looking at what the market is going to deliver. Okay, all right, so I've just marked out 50% at this. Okay, all right, so I hope this was insightful. I will catch up with you much later. I wish you good luck and good trading. Stay blessed and cheers.